Hello and welcome back. This video has been in the making for a while, and I'm not honestly sure if that's good or bad. Let's start out with my current trading and go from there. It's still quite slow and unusually quiet considering. I'm not sure if that's good or bad at the moment, but we will soon see why that might be a concern in the near future. So as we look at the chart, we can clearly see where my grid bot is trading. The yellow lines are the boundary that I've been looking at. And we can clearly see on the chart that the market has been pretty consistent within a range for 3 months straight. This is not the first time, obviously, that this has occurred. But realistically, it is something that we should look at in terms of long-term value, particularly when we look at the order book, the red and green in the background, this part up here that looks like it's a bulged mess. The order book shows that the pricing isn't going to change anytime soon. Most of the orders are hovering around this point, and it's going to be pretty consistent. That's actually good for market stability and trading. But it's a non-volatile market, really. There isn't a lot of movement or push one way or the other. But when it does push, it might be somewhat like this situation here with a heavy push, meaning it just drives the market in one direction with a very brutal force. Now, if you go by physics, where every action has an equal and opposite reaction, then at some point in the future, we can expect the equal and opposite, where the market is just going to have a huge downward push. I'm not so much worried about USD-Euro combinations, but realistically, we need to have a talk about the Canadian dollar. Recent events with the Canadian dollar have really left a lot of questions. Quite a few questions in terms of just exactly where the market, and you can see it here on the chart, the market shows a much lower value than what it is currently priced. But it's not just the US-Canadian combination, it's the Canadian dollar in general. And for that, we need to talk about the bigger problem, the bigger picture. If you have been following the news at any amount at all, the number of Canadian provinces that are tired of Canada seems to be on the rise, to the point that they are now bidding to who can become the 51st state of the United States. I don't know if this is a joke or a way for them to pressure the government back into some level of economic sanity or what is going on here. But it doesn't matter in terms of the bigger picture. The economic fallout for the Canadian dollar is starting to really show signs of pressure. There are quite a few reasonably intelligent economists that even suggest that if this keeps going with no resolution, the Canadian dollar can completely collapse, and every single province involved, whether they are for leaving Canada or not for leaving Canada, will end up devolving into their own currency. And anything paired against the Canadian dollar is going to do extremely well, while it is liquidated into oblivion. The Canadian political scene is a hot mess. And if you spent any amount of time on my Discord server, or even on my Patreon, you know I hate politics and trading. But this is one of those circumstances, as much as I despise politics at any level. We have to look at the consequences of what's going to happen if this actually does happen. If these provinces actually do split off from Canada and decide to go their own way, whether it's trying to join the United States, which I think is a horrible idea, or if they choose to become self-standing, independent countries of their own belief system and ideology. My personal favorite approach that would best suit them. Either way, it doesn't matter. We have the situation of the Canadian dollar, and it is going to have a ripple effect. We have already begun seeing the very direct proportions of how that ripple effect is playing out. The markets are simply stalling, or stalemating, or flatlining, whatever word you want to use. Nobody wants to breathe too hard just because they're afraid of which direction Canada might fall. And I think that word is not only metaphorically accurate, but literally accurate. The level by which trading is going to be affected if the entire country completely fractures, for whatever reason it fractures, it's going to be economic chaos. Let's just put this on the table, put the nice words away. This is going to be a disaster. And it's not going to be a localized disaster. It's going to be a globalized disaster. The Canadian Liberal Party is in a complete scramble trying to somehow prevent this whole mess. And I don't know how that's going to be, because the Canadian people have made it clear they don't like the direction Canada is going. They don't like what the ruling party is doing. They're not following the voice of the people. So in terms of the politics, it is very much a mess. And their political system, the twists, turns, and drama in that system is starting to really spill over into the finance of the Canadian dollar. The economics are starting to catch up with the social pressure caused by the ideology of the party. That will have continued problems as we proceed forth. How the Canadians choose to rule their country is their business. I don't care. That's for them to decide, rightly so. What I care about is trying to figure out what happens when their politics begins to bleed over into their finances. When the market begins to react, and we see very clear signs of that happening. That is what I care about. When you can look at the Canadian history, and you can see where most people think the Canadian dollar is going to go, the answer is very clear. Even on this chart, the Canadian dollar is going to go down. It's going to decrease in value. Whether or not it is going to be liquidated, nobody knows that. and it's foolhardy to even speculate. But there is no question that the impact on the value of the Canadian dollar from the market standpoint is going to go down. Canadian inflation will probably either inflate, hyperinflate, or if they're lucky, it might just stagnate. At this point, I think a stagnated economy might be better than a hyperinflated economy. They are already having a lot of problems covering the basic essentials of life. If the economy hyperinflates because of the Canadian dollar decreasing in value on the global market, that could be disastrous for an already stretched economy. They have problems, and their problems have been there a while. The current political market has just ripped off the Band-Aid. And the truth of just how deep this wound really is has finally been exposed, where the Canadian government can no longer hide just how bad they have been in their finances. The ideal of the way they have ran their country as a government has clearly had complications and consequences. And now that Band-Aid has been ripped off and that wound has been fully exposed, those consequences are only going to become more grave. In terms of how to trade the Canadian dollar or anything around the Canadian dollar, and there are a lot of assets that do work around the Canadian dollar. Quite frankly, given what I see, given that we have a very clear and absolute boundary that goes all the way back to 2019, I personally would say short it. Trade for it so that when it does go down in value, based upon its own investors, trade so that you make money. Because it does look like it is definitely going to go lower. Now, if we look back at the history, let's zoom this out a little bit. We can really see going all the way back 2015, right here, we have the same boundary. So this boundary seems to be pretty hard, and it seems like it's not likely to break. But let's go back even more. It's really, we don't actually break that boundary except for when it was first put on the market back in 2002. So we literally have a 20-plus year history of this asset. And we can clearly see that this asset isn't doing very well. Not even in its own market basis. It's never broken its all-time high. And there's only 3 cases of it getting close to its all-time high. In all 3 cases, it collapsed into a pretty stable range, really. And that's the thing about this asset. Its range is stable. But can it keep that stability with what's going on with the Canadian exit talk? I don't know. I really don't know. What I do know is that the volatility of the ideology has caused the market volatility to slow down to a complete crawl. It's almost as if people are walking on eggshells, not wanting to breathe because of the risk of this thing falling off the table. The short term is going to be a disaster. Long term, it's going to reshape Canada, I think. How that is going to have the actual impact is a different story. But I think we have a very clear, concise, mathematically testable possibility. We need to prepare for the Canadian dollar to drop more in price. This is not the time to take a long position on this asset. We are well above its market median, and we can expect it to correct heavily. More so given the continued talk of the Canadian exit, or Wexit as they call it. Trade safely, trade carefully. Let me know what you think if you trade anything that deals with the Canadian pair, whether it's Euro Canadian, US Canadian, whatever. Let me know. Let me hear your thoughts on what you think is going to happen as this asset continues to function in the aftermath of the talk of the Canadian exit. If you like this video, please give it a thumbs up. Help me grow in the YouTube algorithm. Please subscribe, and thank you for watching.